Industries.
Somany Ceramics earnings are flashing for you on your screen. Well, it looks like a growth of close to about 20% thereabout in their net sales. It's come in at 407 crore. Profits, however, have grown by only 11% thereabout. Abhishek Somany, the joint MD of Somany Ceramics, now joins in. Hi, Mr. Somany, and thanks so much for joining in. Could you, with respect to the Q4 earnings, could you tell us how much of it is on account of the spillover because of the Morbi shutdown? And if we exclude it, what would have been the sustainable growth rate in your revenue?
There was no spillover in the fourth quarter. In fact, the Morbi shutdown in December, that the hangover still persists. And the growth was purely a Q4 growth. Had it not been for the Morbi, our revenues year to date would have been about 40 to 50 crore rupees higher. So what you're seeing in Q4 is what it was. And the earnings are also back in terms of percentage. Our PBT is back to 4.5%. So we have really covered a lot of ground on Q4 in terms of profitability, what we had lost out in Q2 and Q3 purely because of the gas price increase and also the unprecedented dollar appreciation.
Hi, Mr. Somany. Good afternoon. Can you also take us through what the volume growth and pricing has been like this quarter?
The last quarter, we saw a little bit of a price increase because the Morbi region had moved from coal gas production to natural gas production. So we did see about 3 or 5% increase in prices. In terms of volume, like I said, because of the 1 month outage, we could not get any extra volume from that region. And about 55% of our revenue comes from that joint venture and outsourced manufacturing from Morbi. Therefore, we lost out on the volume growth. Year to date, we have grown by approximately 13% by volume.
Okay. What's the outlook looking for FY15, and will there, when will the Morbi unit, revenues from that start accruing into the P&L?
The Morbi units, the problems are sorted out. It was just that the whole 1 month shortage, specifically on a quarter end, which was December, had a major cascading effect in last quarter. Last quarter anyway is one of our heaviest quarter, March being one of the heaviest months for the last 15 years. Therefore, the problem. Otherwise, those issues have weeded out. We have put in a lot of capacity in the last quarter, and we are also putting in capacity this quarter, which is Q1. Therefore, from Morbi, we expect a reasonable amount of volume coming in for the quarter. FY15, our plans are extremely aggressive, and we are looking at a 20+% growth going forward for FY15. And with the new government coming in, it's only going to get better. But the 20% growth, FY15 is going to remain intact. And obviously, the bottom line would be significantly higher than the 20% growth in terms of percentage terms. So we're very, very confident and looking forward for the 2015.
Okay, and also would you be looking forward to the implementation of the GST? Is there hope building that, you could see it implemented soon? What are your expectations?
I don't think I would want to comment on the expectations. We've been waiting for it for the last 3-4 years. But we do hope that if not this particular budget in July, it should be implemented in the next 6-8 months in the February budget. So we're really looking forward, and that would be a huge, huge booster, not only to our industry, but to the entire Indian industry. More so for the ceramic sector, because we are competing with the unorganized sector, which the business model of those players are on tax evasion. With the GST coming in, our gap between that would reduce and give the organized sector a huge, huge boost.
The board has also approved various expansion plans, expansion of the ceramic floor tiles capacity at Kadi, expansion at Amora Tiles Private Limited. You're also planning to acquire up to 26% equity in Sonic Sanitary Ware. Could you tell us overall what's the amount of capex that you've lined up in FY15 and how will it be funded?
The capex has been lined up, which is approximately between 40 to 50 crore rupees of capex is what we've lined up. It will be funded by debt and also internal accruals. That's going to be the source of fund. We are expanding Amora by 2.5 million and Vicon by another 2.5 million and Acer by 3 million. So all in all, we're expanding and our own manufacturing brownfield expansion of 2.5 million. All in all, we're looking at 10 million square meters of expansion, and we are in talks with another joint venture partner for putting in another 2.5 to 5 million square meters, which the board has just approved.
All right, Mr. Somany, we appreciate your time this afternoon. Thanks very much for joining in. All the best for FY15. On that note, it's time for us to take a very quick break. If we can just pull up two stocks, Gammon India and JM Financial. You should watch out for them. Watch out for both these stocks. There is weakness seeping in. So Gammon India has lost about 7.5% this hour, and JM Financial is the other one. So that's lost about 2%, but looking weak. We'll take a quick break, come back in a bit. On the other side, we'll speak with another big buzzer. That's Ugar Sugar. V. Shirgaonkar, the chairman of the company, will join us on their earnings.